Imagine two identical twins named Mark and Dave. They are 30 years old, and they have the exact same job. They earn the exact same salary of $75,000 a year. They live in identical houses next door to each other in the same suburb. They drive the exact same model of gray sedan. On paper, their financial lives are completely indistinguishable. But over the next 30 years, Mark is going to pay $250,000 more than Dave. He will pay this massive amount for the exact same life. Mark is not going to light this money on fire. He is not going to lose it in a bad gamble or a risky investment. He is going to hand it over to banks and insurance companies. He will do this simply because a secret 3-digit number attached to his name is lower than his brother's. This is the invisible tax that nobody talks about. We obsess over income taxes and sales taxes every single year. But we ignore the credit tax, which is the most aggressive wealth destroyer in the modern economy. If you pay your bills on time but still feel like the system is judging you, you are right. If you are terrified of your score dropping because you bought a new sofa, you are right. Today we are going to expose the credit score for what it really is. It is not a measure of your moral character. It is not even a measure of your actual wealth. It is a measure of how profitable you are to the banking cartel. In this high-interest environment, understanding this game is a matter of survival. It is about saving $250,000 that belongs to you. The credit score system we use today is actually younger than most people realize. The FICO score was only introduced in 1989. Before that, lending decisions were made by actual human beings. The old system had its own massive problems with bias and unfairness. But the new system swapped human bias for algorithmic ruthlessness. We have been brainwashed into thinking this score is a fundamental pillar of civilization. But it is actually a recent corporate invention designed to standardize risk. Its only purpose is to help banks turn your debt into a product they can sell. By doing this, the system created a caste system for the modern world. The prime borrowers get access to nearly free money. The subprime borrowers pay a surcharge on their very existence. Let us look at the math, because the numbers are genuinely terrifying. The biggest purchase of your life is likely a home. Let us say you want to buy a $400,000 house in today's market. If you have a gold-plated credit score of 760 or higher, you get the best rate. Let us assume that rate is 6% for a 30-year mortgage. But if you have a score of 620, the banks view you as a risk. They do not deny you the loan because that would be leaving money on the table. Instead, they charge you a risk premium by bumping your interest rate up. It might only look like 1.5% higher on the brochure. 1.5% sounds like pennies and seems trivial to most people. But when you run the numbers over 30 years, the reality is shocking. That small difference adds up to roughly $165,000 in extra interest. Think about that for a moment. You are buying the same drywall and the same roof as your neighbor, but you are paying over $150,000 more for it. That is money you cannot invest in your retirement fund. If you had invested that difference in the stock market over 30 years, it would be worth $500,000. So the true cost of a bad credit score is not just the extra interest you pay. It is the total destruction of your future wealth and your freedom. This is wealth that is transferred directly from your pocket to the bank's bottom line. But the scam goes much deeper than just housing loans. Your credit score is no longer just about lending and borrowing. It has become a universal reputation score for your entire life. In most states, auto insurance companies use your credit score to set your price. They have decided that if you have a lower score, you are statistically more likely to crash. This means even if you have a perfect driving record, you will pay more. If you drive like a grandma and never had a ticket, your price still goes up if your score dips. Studies show that a safe driver with poor credit pays double what a drunk driver with perfect credit pays. Let that sink in for a second. The system trusts a person with a criminal driving record more than a safe driver with a low score. This is the poverty premium in action, and it is happening every day. Landlords use this score to decide if you are allowed to live in their building. Utility companies use it to charge you massive security deposits. Even employers in the finance and defense sectors check it during background checks. You could be the most qualified candidate for a high-paying job, but if you missed a few payments 3 years ago during a medical emergency, you are flagged. You might be passed over because the algorithm says you are irresponsible. The score has mutated from a banking tool into a judgment of your value as a human being. It determines where you can live, what you can drive, and where you can work. The most twisted part of this game is how the score is actually calculated. It does not measure how much money you actually have in the bank. You could have $10 million in cash sitting in a duffel bag right now. But if you have never taken out a debt, you might have a score of 0. To the algorithm, you are a ghost and you do not exist. Conversely, you could be broke and living paycheck to paycheck every month. But if you constantly borrow money and pay it back just in time, you are a superstar. The score rewards the constant cycle of debt and participation. It hates people who use cash and stay out of the system. It even hates people who pay off their loans too early. Have you ever paid off a car loan and watched your score drop 20 points? That is the system telling you the quiet part out loud. They liked you better when you were paying them interest every month. When you stop being profitable to them, your score goes down as a penalty. It is essentially a loyalty program for debt slaves. We must understand the specific mechanics because ignorance is very expensive. The biggest chunk of your score, 35%, is your payment history. This is a binary system where you either paid on time or you did not. One single missed payment can wreck your financial reputation for 7 years. The second biggest chunk, 30%, is your credit utilization ratio. This is the balance of how much credit you have versus how much you actually use. If you have a $1,000 limit and you spend $500, your ratio is 50%. The algorithm hates that because it thinks you are desperate for money. But if you call the bank and get them to raise your limit to $10,000, things change. Even if you still spend that same $500, your ratio drops to 5%. The algorithm suddenly loves you because you look like you do not need the money. You did not pay off any debt. You just changed the math on the screen. This is a game of optics and looking like you have access to millions you do not spend. You also need to understand how the wealthy pass on good credit like a genetic trait. This is called the authorized user strategy. A parent with a perfect 800 credit score adds their child to their account. The child never even receives a physical card and never spends a single dime. But the entire 20-year history of that account is copied onto the child's report. The child wakes up on their 19th birthday with a 780 score. They walk into a dealership and get a 0% interest loan immediately. Meanwhile, a child whose parents have bad credit starts at 0 or worse. They walk into the same dealership and get hit with a 15% predatory loan. This is a primary mechanism for the invisible inheritance of inequality in America. But what happens when things go wrong and your report is a mess? The credit repair industry is 90% scams, but the logic they use is real. It relies on the Fair Credit Reporting Act, which is a powerful law. The law says that any information on your report must be 100% accurate. If there is a tiny mistake, like a wrong date or a misspelled name, you have rights. You can dispute the item, and the Bureau has 30 days to verify it. If they cannot verify the debt with the original lender, they must delete it forever. Many people clean their reports not by proving they paid, but by finding messy paperwork. It is a legal loophole that the wealthy use every single day for taxes. You should use these same rules to protect your own credit and your future. Some people might say that credit scores are for debt and debt is always bad. I respect the purity of living only with cash if you are able to do so. If you can buy a house with cash, then you should opt out of this matrix entirely. But for 99% of people, you will eventually need a mortgage. Living in modern society with a 0 credit score is like playing life on hard mode. You will face friction at every turn and pay higher deposits for everything. The pragmatic move is not to boycott the score, but to manipulate it. Treat it like an annoying video game that you have to beat to get the rewards. First, you must automate everything to protect your payment history. Set every single bill to auto-pay at least the minimum amount every month. This is your safety net, so you never miss a payment due to forgetfulness. A 30-day late payment is a stain that will cost you money for 7 years. Second, you should play the limit game as often as possible. Every 6 months, ask your credit card issuers for a limit increase. Tell them your income went up if it is true, and most will give you more. By expanding your available credit, you are padding your utilization ratio. You are building a bigger buffer so a big month does not tank your score. Third, never close your oldest accounts, even if you do not use them. The length of your history is 15% of your total score. Keep that old college card open and buy a pack of gum once a year to keep it active. Closing that card is like erasing years of experience from your professional resume. The bottom line is that you cannot let this score define your self-worth. It is nothing more than a game token for the financial system. It is a pass that gets you into the room with the lowest interest rates. You must protect it viciously because you refuse to pay the extra tax. You refuse to pay that $250,000 over your lifetime. You want that money in your own investment account working for your family. Do not fear the score, but learn to dominate the algorithm instead. Keep your utilization low and dispute every single error you find. Statistics show that 1 in 5 credit reports has a significant error. The entire system is designed to extract wealth from people who are disorganized. By getting organized and understanding the code, you become unprofitable to them. You avoid late fees and you secure the lowest possible interest rates. That is the sweet spot where you win and the banks lose. The banks are banking on our collective ignorance to make their profits. They want us to accept high-interest loans because we think we do not deserve better. Let us stop giving them our hard-earned money for no reason. Take control of your numbers, and you take control of your life. Your future self will thank you for the $250,000 you saved today. Keep your head up and keep playing the game until you win.